Hi, my name is Ruben Bock, Portfolio Manager for Atticus Wealth, giving you this portfolio update from my home office in Melbourne under coronavirus lockdown still. The market backdrop has been positive. We're in early stages of recovery, and we're also coming into a US election, which will be a major juncture for equity markets, and our portfolios have performed strongly with this backdrop. The coronavirus is stubbornly high in the USA, whereas in Australia and China, the situation is much more under control. And that's feeding into what I would call a market temperature check. There's two key measures I'm showing here. The black line is the unemployed initial claims, which is the number of people who are losing their jobs in America. And that's showing a recovery, but going quite sideways of late. The other measure I've got here is in blue, the USA's default risk premium, and that's a corporate bankruptcy measure to showing the risk from further bankruptcies in the corporate sector. And that's also going very sideways of late. And that definitely reflects the fact that the coronavirus second waves are still prevalent. And that's a very key measure that investors need to monitor in terms of how that feeds through into economic performance and ultimately earnings for our companies that we invest in. And I'm showing that in the bottom half of this chart. The yellow line is USA, and earnings have been recovering quite nicely, even with this coronavirus backdrop. And in Australia, earnings haven't been quite as strong, but we're finally seeing some upwards momentum there. And that's positive, and that will help share prices move forward. When we look at valuations, investors would admittedly be nervous at valuation levels if you look at traditional price earnings ratios, which is shown in the top half of this diagram. Going back to the year 2002, valuations are the highest I've been throughout this whole period by that metric. But when you also account for the fact that interest rates are at the lowest levels we've ever seen in this period, valuations are nowhere near as bad. The final chart I've got here shows a position where we're looking to outperform our benchmark. And what I'm charting here is in blue is the inflation rate, and in red is the interest rate level. Over time, you'd expect these levels to be about the same. But what we can see is big divergence. Interest rates have been squashed down by quantitative easing in America. Against that, the inflation expectations are still stable or moving somewhat higher. And we're expecting some convergence in the next sort of year or so. The way we're playing this position in our portfolios is an underweight to global bonds. And that's something we can talk about more in a future video update.